The price swings are rather an essential element in the crypto market. The essentiality of it lies in the spikes that we see due to the market sentiments. The collective belief about coins in the market rises the prices due to a larger buying action, which in turn turns them rare and hence a higher value. However, what is this process of derivatives AMP, and how fruitful are they in the crypto market? Can you earn enough through the system? Stay tuned to find out more about it. Welcome back to this channel. We will be speaking about the derivatives AMP, and we will see how profitable they will be in the coming months or years. Make sure you hit the like button and also subscribe to this channel. We have a lot more things coming for you, and such an action from your side will keep us motivated. This video is not a piece of financial advice, and we are not financial advisors. This video is purely meant to be for entertainment or educational purposes. Therefore, due diligence from your side before making any financial decisions is an absolute mandate. We would request all of you to ensure that you take the advice from your financial advisor for all your portfolio needs. Cryptocurrency is an extremely volatile market. Therefore, it is very important to ensure that all your steps you take are well thought and processed. Having said that, let us get into today's video. With no further delays. One of the major reasons for the volatility in the cryptocurrency market is the delays caused by the massive derivative industry. The growth of the industry was spiked through a huge demand for leverage. Another major reason for the same was the use of speculative tools in the market. Now that things are getting digitized, and since the concept of cryptocurrency seems to have started being accepted by nations worldwide, El Salvador and Ethiopia are among examples now. Many may presume this to be occurring in the recent days. However, as a matter of fact, this concept has been around us ever since Wall Street came into place. Binance alone could gain over $48 billion derivative volume in a single 24-hour period, which ended on July 16, 2021. Being the largest crypto exchange in the world certainly has its own advantages, and this was surely one among them. This value was in fact higher than the total activity in the exchange. In fact, the crypto derivatives were traded for more than coins in June. This happened for the very first time in 2021 and was an indication of the applicability of cryptocurrency in the real world. As people started using cryptocurrencies for various purposes, these values will certainly go higher and will give us some crucial data to analyze and understand the needs of the world at the moment. Crypto derivatives trading has often turned out to be extremely fruitful in the long run and the short run. The bullish positions frequently used to exceed the bearish ones in most of the cryptocurrency exchanges before the drop in the price that were noticed in the recent months. As a result of this, Binance could have even claimed proudly that it could gear up the positions by multiple times, meaning thereby the derivatives market seems to be working and flourishing really well in the said duration. While all this is happening, one thing that needs to be taken good note of this is that 49% of investors say that Bitcoin is rat poison. However, the remaining 51% do have high hopes for Bitcoin. As inflation hits, many claims that governments will start squashing out cryptocurrencies. However, the trend at the moment evidences a lot of governments in fact taking up the concept of cryptocurrencies and applying them to use in their countries. As a result, the government has now started to target crypto leverage trading to ensure that they get something under their control. However, experts have a certain opinion that this may not be the case in the long run. Derivatives trading will certainly turn out to become one of the biggest things to come in the market. This is owing to the high potential and support it has from the market. The current market, according to Alexander Hopner, the CEO of 100x, is just the starting of the entire concept of cryptocurrencies. What he means is that we may just have noticed the tip of the iceberg, whereas a huge part of it may be still under the surface. The absence of global fungible market in the traditional markets, which are the regional connected markets through monopolies, and the markets being restricted to pro traders exploiting the market at various instances, became the reason why he felt that he may as well switch off from the stocks and move into the crypto market. The finance through his concept could reach the next level and would also give him the opportunity to start working on something different. Cryptocurrency, according to him, brings the finance industry back to its fundamentals and refocuses the exchanges. Therefore, this was something much more profitable and authentic for Alexander Hopner. The need to clean out a few things is recognized and appreciated by him. According to him, it is these things that call for regulatory actions, and therefore the need to fear them does not arise if the concept is being used for the best possible manner. Now let's get into AMP specifically. derivatives being secondary contracts or the tools that derive their value off from the primary underlying asset, provides adverse protection against the volatility that is often noticed in the market. This is what makes things much safer for the investors and increases their confidence in a certain type of cryptocurrency. A financial contract that derives its value from the currency itself ensures that you remain safe from the major losses that you may become a victim to under normal circumstances. This means that the derivative value will probably remain much more stable compared to the value at which you trade the asset for today. AMP could peak off in recent times to touch the $0.11 mark on 17 June 2021 and then fell down to the present $0.042 on July 18, 2021. There are high chances that we may be able to push up, taking the support at over the $0.028 mark. It is very important for the coin to be able to push through the same to be able to regain the value it has lost over a period of time. AMP will certainly be a very good investment in the long term. However, the immediate growth of the coin is something that can be written off to impossibility. This means that there are high chances that an investor may have to wait for a long time before getting into the regions of profit. Derivative markets, on the other hand, could be an alternative while this process is being achieved. The derivatives catering to retail traders see a change in mostly the unregulated exchanges. By that, we mean FTX, Bitfinance, and Huobi. Derivatives being used for risk management may become the best friend for an investor if used in the right manner. An investor may get into the derivative investment to mitigate the risk that he has been accumulating by investing in the potentially new volatile cryptocurrencies in the market. Derivatives may also work as predictors of risk. This turns out to be of great help in the uncertain market conditions when the prices are high due to overbought conditions. The risk avertment process could test the market sentiments, and therefore traders could rely on the indications possessed herein to make their financial decisions. The price discovery remains a very fundamental application of the derivative process. They validate their decision on factors like the market structure or liquidity and information flow in the system. The two major applications being hedging and speculations, as we mentioned earlier. Protection from adverse movement in the market may be protected through a process called hedging. This is the most important purpose that the derivative investment may offer you. Even if you invest for the long term in Bitcoin, you will go through some portions of fails in the prices. It may also be the case where you may not be able to gain a lot of money from the same. The best part about hedging is that one need not compromise the holding he or she has in the cryptocurrency being spoken of. You will not need to liquidate them at prices that may be unfavorable to you. We hope you liked this video. If you did make sure to leave us a like and also subscribe to this channel. Make sure you leave a comment on what you think about this process. We would love to hear your views on it. Till we meet again here, keep getting most out of the derivative market and invest in the best possible places.